Live from Shanghai and JP Morgan's Global China Summit, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. We're focused on technology today as it becomes the dominant theme in tensions between the U.S. and China. U.S. attempts to restrain China's advances in the fields of AI, robotics, and biotech don't seem to be having much success. And in a move that could further strain relations, the Trump administration is blocking Harvard University from enrolling international students. It says the campus is unsafe and alleges that the elite Ivy League school has ties to the Chinese Communist Party. And many, including former Treasury Secretary Summers, think the move is damaging to the U.S.
This is vicious, it is illegal, it is unwise, and it is very damaging.
We'll be discussing the U.S.-China tensions through the lens of business and tech with a range of guests. We'll look closer at trade talks with Cohen Group senior counselor and former president of the U.S.-China Business Council, Craig Allen. Linear Capital founder and CEO Hengrui Wang will be joining us from the Beyond Expo in Macau for his perspective on investing in Chinese tech. Also ahead, a deep dive into growing global competition in augmented reality technology with Misa Zhu of Chinese tech firm Rocket, plus the CEO of Singapore biotech firm Mirxes on their decision to list in the Hong Kong market. Now, meanwhile, a bounce back in equities this month, tech in particular, is reflecting the temporary U.S.-China trade truce. Bloomberg's Avril Hong is here with more. Avril.
Has, definitely that is one of the drivers we've been seeing in Asia stocks, and it's really quite a rebound we're seeing in equities overall. We are headed for a 6 week of gains, mostly across the region. You're seeing gains today. And this is on a week where we've seen these massive bond market ructions amid concerns about U.S. fiscal health. And note that the region's benchmark in the past 2 of the 4 sessions have actually managed to clock gains. And if you pull the timeline back a bit further into Liberation Day, the region's benchmark, MSCI Asia Pacific, has actually climbed 20% since then. Now, to put things into further perspective for you, flip the board and take a look at this chart courtesy of our stocks team's Winnie Su. And she put out a good piece which shows you how infotech on the region's benchmark has actually gone from the laggard to the outperformer in this past month on the region's stocks. And it's not just the benchmark heavyweights like the chip names, it's also the companies that have a large chunk of their revenues from the US. Some of them, in terms of stock gains, have surged 50+%. So keep that in mind. And it also tells you how there's this rotation away from what was seen as some of the defensive plays, the consumer names, the names that had focused on local demand. It also tells you how Asia supply chains, they're so deep, they're so complex that it's very difficult to replace or replicate overnight. Now, this also tells you overall the impact that the US-China trade truce has kind of had on Asia stocks overall, Has.
Avril, thank you so much for that. Now, Beijing and Washington have resumed high-level contact with a call on Thursday between senior officials. It's a sign that the two sides are maintaining active communications following their trade truce earlier this month. Well, joining us now is Craig Allen, senior counselor at the Cohen Group. He's had a long career in U.S. public service, primarily within the Department of Commerce, serving as Deputy Assistant Secretary for both Asia and China. He's also a past president of the U.S.-China Business Council. Ambassador, good to have you with us.
Thank you so much.
We talk about how they're keeping communications open, but is that enough? I mean, we're counting down to the 90 days and we're nowhere close to a resolution.
So 2 weeks ago, we had no negotiating structure. Now we have a very sound negotiating structure with Vice Premier He Lifeng and Secretary Bessent in the lead, very ably supported by two different teams. And so we're in a much better place because the two seem to get along well. Communications are good. All the problems are on the table. So yes, I believe that we're in a much better place on the trade side.
What might transpire in the days ahead?
So the first date to look for is July 9, which is when the 90 countries in the world for whom President Trump has designated reciprocal tariffs will either receive those tariffs or they will be negotiated away. So how many deals will the Trump administration have on July 9? It is approximately on August 2, so shortly thereafter, 3 weeks thereafter, that the U.S. and China trade agreement comes to a decision point. And therefore, what happens on July 9 with the 90 countries will inform what happens on August 2 with the U.S. and China very deeply. If the Trump administration has 10, 20, 30 agreements, then the negotiating leverage that the Trump administration has will be very strong. If the Trump administration only has a US-UK agreement signed a week ago, then Chinese negotiating leverage will be stronger.
We talk about how communications between the US and China are at a high level.
Yes.
But we also hear from Trump telling Xi Jinping, call me.
Yes.
Nothing has happened.
Yes.
Is it crucial for us to have direct-to-direct leaders communicate with each other for a resolution to actually transpire?
So the modalities of this conversation are very different from a Chinese perspective and an American perspective. The Chinese perspective is everything should be organized, the results should be known, the protocol should be perfect, everything must be finalized before the two meet. President Trump is much more transactional and would prefer to meet at stage 1 rather than at stage 30. And so the two negotiating styles are very, very different. But President Xi holds the cards here. He could either meet or not meet. And I think that this has caused a little bit of frustration in the White House. But the negotiations are moving along. Things are getting better. The conversation is well structured. And I think that we should take some degree of confidence that this process could work out okay.
Even if we can resolve the differences in negotiating style, fundamentally, it is a divide in ideology.
Sure.
We've heard the likes of Bessent coming out to say, you know what, we don't want to decouple, but we also want to protect our strategic necessities.
Yes.
The two sides come together from different perspectives.
Well, that is completely true. On the other hand, both leaders want a deal, and both leaders recognize that on the trade and on the economic side, that a deal can be done that benefits both sides. There are huge pragmatic reasons for moving forward, despite the ideological differences. And I hasten to say that President Trump is not an ideological leader at all, and he wants a pragmatic deal. And that is something that the Chinese side understands, I think, quite well, and is certainly working hard on. And therefore, despite the ideology, despite the competition across every domain of international affairs, two pragmatic leaders can do a deal.
The thing is, tensions within the U.S. and China have extended beyond just trade and technology. It's now in education.
Sure.
We woke up to the headline that the Trump administration has banned foreign enrollment into Harvard. And it's not just the Chinese, but it did allege that Harvard has links to the Communist Party. I mean, how do you think this would be read by China?
Well, firstly, I would say that this is an unprecedented move by the executive branch. And the allegations seem wild to me and unsupportable in a court. I'm sure that this will be followed up by court action, and at least it strikes me that Harvard would have a very strong case here. within the United States and within President Trump's supporters, there is a very strong anti-elite sentiment, and Harvard is a convenient punching bag for the administration. And therefore, I think politically, perhaps this plays out for the president, but legally it doesn't. There are no grounds on which the president can do this.
But what's more important is the perception from China. I mean, we know that innovators in China, top CEOs, tech CEOs in particular in China, have had some kind of exposure to elite universities in the US. How might China be reading this? What are the implications, bearing in mind China contributes in a huge way to the foreign students in the US?
Sure. So this is a battle between Donald Trump and Harvard. It's not a battle with China. However, China is being used, and the Chinese will no doubt not like that one little bit, because why only China, and why are all students not welcome at Harvard? So this seems to me to be a sideshow on the bilateral relationship, but no doubt it will confirm to Xi Jinping that there are risks in meeting with Donald Trump, and that he might put it off for another day.
Might the Harvard issue have implications on trade talks?
I doubt it. At the same time, U.S.-China services trade, including education and entertainment, are very important. And any step that is taken to reduce America's services trade surplus with China or other countries is a step in the wrong direction. And so there are economic consequences to pronouncements of this type. But I think that over the longer term, the real issues within U.S.-China relations are going to be addressed. It's a little bit harder now, but this can be overcome as well.
Even if it is a separate issue from trade, might that perhaps shift the thinking among the Chinese? Would, innovators, CEOs think twice about, furthering their studies? And
I think probably not. The U.S. and China have such a long history in education, and Harvard's prestige has probably risen in China as a result of these charges. And so I suspect that this is a sideshow. It's important for Harvard, of course. But vis-a-vis the U.S.-China relationship, I look at things as fundamentally going in the right direction, and we shouldn't be distracted by minor issues of this nature that aren't fundamentally important and are ethereal. They will go away. This will be resolved over time. The president is going to have a hard time dispermitting students to go to one particular university.
Ambassador, in your mind, all things considered, how might a deal look like?
So I do think that August 2 is an important date when the 90 days of the provisional deal end. Of course,
what concessions, though, are both sides willing to make?
So I think on both sides, there's a realization that trade is important, and the tariff levels, even at the current 40% for Chinese exports to the U.S. and 30% for U.S. exports to China, is still too high. And there will be economic damage at that high level. And indeed, there will be many factories in the United States that are not able to buy crucial imports from China. Prices are going to go up across a broad spectrum of products. And those tariffs have to come down. Now, the structure of the tariffs is currently at about 40%. Half of that is fentanyl. And so if the Chinese government takes resolute measures to close down fentanyl precursor production and sales on the dark web and throughout the world, then those tariffs could disappear, bringing us back to pre-liberation, pre-Trump era tariffs of about 20% on both sides. It's not hard to get there.
It's not hard to get there, but is decoupling, in fact, inevitable, given the fundamental divide that we talked about earlier?
Secretary Bessent has spoken about this in some degree of detail, about strategic decoupling. And what does he mean by that? He means that in vital national security areas that neither government wishes to be dependent on the other government. And so certainly that would be semiconductors, weapons, but it has expanded to include pharmaceuticals and some healthcare items as well, which are now considered national security sensitive. And so I think that we'll get to the place where those national security sensitive items, the United States and China will not trade with each other. The other 90% of the economy should be close to WTO and MFN basis trade because it's in the interests of both countries.
Isn't it true, though, however this plays out, supply chains will shift?
Supply chains are always shifting every day, and indeed many American and Chinese companies have prepared for this day. Unfortunately, they had invested in Vietnam and Mexico, which are potentially subject to the reciprocal tariffs. And so we do need to watch that larger global picture. Will the 47% tariffs on Vietnam go into place? Or will there be a deal with Vietnam? And this has created an inter-ASEAN rivalry that is very interesting to watch. Singapore, for example, will be at 10%, Vietnam at 47%. And Philippines at a lower level. And so we need to watch this because it will drive decision making over time. The business community requires stability to invest. Today, there is no stability, no predictability, no way to anticipate what the tariff rate will be if I invest in country A, B, C, or D, unless I invest in the United States. But that, in many cases, is simply unrealistic due to the lack of labor.
Ambassador, thank you so much for your insights today. Great perspective there. Craig Allen, Senior Counselor at the Cohen Group. Plenty more ahead. Keep it here with us. This is Bloomberg. Live to Macau now, where our tech reporter Annabelle Jewelers is at Beyond Expo 2025. She's joined by a special guest, Val.
Yeah, that's right, Has. Harry Wang, founder and CEO at Linear Capital. So, Harry, thanks so much for joining us this morning. And I want to dig into some of the investments because I take a look at your portfolio and actually you've got some pretty well-known startups in there. Horizon, Kujali as well, Agile Robotics. What's your sort of investment thesis and what are the areas that you're looking at in particular?
So our key line is called as a frontier tech investment. There's a line we emphasize a lot: frontier tech, frontier productivity, and the frontier lifestyle. So you can apply frontier tech to really improve the productivity, efficiency of doing work, eventually benefiting people's life. If you are along that line and very tech-driven, we'll be very interested. But if you go, to the more details like data, AI, SaaS, robotics, or those kind of areas.
And you talk about frontier tech and some of these things like humanoid robots, for instance, AI, I mean, it's really entered the mainstream. So what's
next? It was not 10 years ago.
Not 10 years ago, but what are you looking at today that's going to be what we're talking about in 10?
Combination of those. Well, you may expect answers like, okay, quantum computing for the futures. We actually try to invest in things that may go mainstream in the next 5 years. So we did kind of those analysis, research, try to figure out what may go stream in the next 5 years, not now. And if 10 years later will be definitely mainstream. So those kind of things are things we really like. I think, for example, embodied AI is definitely one, but may not be humanoid, not the human form of robotics.
And when you forecast into that ecosystem in 5 years' time, are there very separate ecosystems between China and the US?
It will be separated in my opinion. But maybe some other, middle ground countries may serve as this sort of buffer or exchange platform to allow the exchange to happen. But I think the direct sale against each other may stop in those very futuristic frontier tech products.
So you talk about embodied AI, maybe put that into practice then, forecasting again 5 years in the future, and you've got a completely bifurcated world now between the US and China, and you've got these sort of like Europe, for instance, Middle East that are the conduits, but how exactly does that work in practice?
Well, I don't think it can be filmed. It will become interesting sort of tips for the U.S. intelligence to really understand how things go, but the general idea is, okay, for us, we just wanted to invest in the best team that can take advantage of the technology and also the supply chain capability, which China is really good at, and build something not just advanced, but really at the 5 to 10% of the cost the U.S. is doing. So if we can get something like that, I think the people, the business interest from the consumer places you mentioned, they will come in a ways you cannot imagine. Yeah, so this is sort of, how do you call it, conspiracy sort of game. Everyone is playing, even U.S. businessmen.
What's your view then? Today there's a story that's very well read on the Bloomberg terminal, and it's the action that the US has taken to stop Harvard University from being able to accept. Share more.
I think foreign talents are one of the key factors that made US great in the last, I would say, 3-ish decades. I benefit from that. I went to Stanford. But the thing is, when I went to US and stayed for 10 years, I think that's like golden period. Americans were very, how to call it, well, nice is a word to underestimate it.
Harry, thanks so much for joining us. That was Harry Wang there, founder and CEO at Linear Capital. Back to you, Haz.
That's right. Tech companies getting caught in the crosshairs. Annabelle Jewelers, thank you. Still to come, Bloomberg has learned that Apple is about to launch smart glasses next year, but it may be set for an augmented reality check in the Chinese market. Rokit is one company that already has a head start in AR glasses on the mainland. Its co-founder and CEO, Mirxes Zhou, will be joining us next. Keep it here with us. This is Bloomberg. Welcome back to Inside. As we talk about trade, we're getting headlines on trade. We have Prime Minister Ishiba saying that he's had a phone call with President Donald Trump. Of course, those talks coming ahead of the third round of negotiations to do with trade. Ishiba saying that he explained Japan's stance on U.S. tariffs to Trump. and that he conveyed hope for a productive talks over trade, and that Japan's stance on tariffs hasn't changed. Now, again, Ishiba conveying hopes for a productive talks over tariff. He'll keep seeking the removal of additional U.S. tariffs. We know that Japan is headed for a third round of talks. Japan among dozens of countries in negotiations with the Trump administration to remove the tariffs imposed on those economies. Japan's top trade negotiator, Akazaka, heading to the U.S. for a third round of trade talks, with Tokyo determined to avoid a deal that doesn't address levies on its key auto industry. Of course, Japan is back from break. We have the Nikkei 225 currently in positive territory, up about 0.8%. The yen front and center, of course. We've had the yen strengthening on the back of a weaker dollar environment. And now we have those headlines, perhaps some momentum for the Japanese market on the back of that as well. It is a positive that both leaders are in negotiations, especially ahead of those third round of talks coming up very shortly. Now, speaking of trade, speaking of tech, one emerging product segment fueled by AI is augmented reality glasses. Mark Zuckerberg's Meta has taken the early lead with its surprise hit Ray-Ban Meta glasses, and it's working on a deluxe version with a screen as early as the end of this year. But rival tech heavyweights are lining up to challenge Meta in this new front in the wearable space. Bloomberg has learned Apple is looking to release its own smart glasses at the end of next year. Sources say they would have cameras, microphones, and speakers, and handle tasks such as phone calls, music playback, and live translations. And Google has also debuted Project Aura, the first eyewear to run an AR version of its operating system Android. Google is partnering with Chinese smart glasses maker XReal on the product. Now, joining us now is another competitor of Apple, Meta, and Google in the augmented reality space. Misa Zhou is co-founder and CEO of Rookit. Misa, good to have you with us.
Thank you. Thank you for your time.
It is a very competitive space. How are you competing?
Well, actually, it's pretty simple because we are, in a very huge market in China. Because in China, more than 90 high school graduated students wearing glasses. So it's a huge market. It's a big opportunity to the Chinese company to involve to the whole industry. So also we have so many contents and the supply chain is pretty much in China. So I think we have many we got many benefits from the manufacturing.
I see that you're wearing the glasses.
Yes. Yeah.
What can the glasses do?
Well, pretty much, you just mentioned about the Meta and the Apple are working on.
How are you different?
Oh, with display. That's a pretty simple answer. If you're talking about AI, that means we get many information, not just the input and also output. So the audio is not the best way to do the information output, especially with the long content. For example, the interview content, I think it's much better with text just in front of you. So you don't have to see your smartphone. You don't have to see any other devices just in front of you. So this is most important thing.
You talk about the Chinese market. It's a huge market.
Huge market.
Talk to us about the kind of growth you're anticipating. Where exactly does demand come from in the first place?
Well, the first place is actually from, I think many like internet company or the guys who really loved the new technology. Actually, they are the first or early adopters of AR glasses. They are the first group of users, and they love our products. Our pre-order, it should be, well, if you're talking about the AR glasses with display, I think we are the biggest market share holder right now. So.
But shipments are starting in the third quarter, the fourth quarter, is that right?
Oh, next week, by the end of next week. So, we're still make it more and more fast, and the manufacturing is still a big challenge to Rookit. Not just to Rookit, to the whole industry. But I think we're gonna figure out how to ship more and more products to the end users. So everything is all right now. So it's pretty much on the right track.
You know, we talk increasingly about how tech companies are getting caught in the crosshairs of US-China tensions. Do you anticipate challenges as you roll out your expansion plan?
Well, AI technology or AR technology should be a global business. Because, for example, the most important feature of this product is translation. You just mentioned it. Well, with display, I think the translation actually is more natural and more comfortable to the end user. That means the subtitle is just in front of me. So you don't have to wait the voice finished and do the next conversation. So I think it's more comfortable. So, but the translation is going to be a global business, right? So the big challenge is, you just people say that the tariff from the United States actually is a big challenge to everybody, out of the United States. So we are still wait and see what's going to go. But I think somebody's going to fix it.
Yeah, but given the tensions between the US and China, might perhaps, users be gravitating towards more US brands, more US companies, the likes of Meta, the likes of Apple, versus a company coming out of China?
Well, if you talk about 20 years ago or 10 years ago, maybe that's true. But today, I think the Chinese consumer, they get more and more confidence with the Chinese company as well. So I think now we should believe we can do the same good as the other company, even the giant company in the world. So yeah, I think the opportunity, actually the big opportunity, is pretty much the Chinese company can catch up the big opportunity this time. Maybe we can be the leader of this industry.
When do you see that happening, being the leader in the space?
Well, in the coming 2 or 3 years, maybe. Yeah, pretty soon.
The AR market is huge. We're talking about a $50 billion market right now, and they expect growth of 30% in the coming years. I'm just wondering, how are you capitalizing on the technology? How are you positioning the technology to actually capture a bigger part of that market?
Well, first of all, we got realize that people use glasses. The most important thing is you gotta be comfortable and wearable as a regular glasses. In the past 10 years, many, even giant companies make a huge mistake because they just make it pretty powerful, but it's also make it pretty bulky and heavy and of course more expensive. So I think we gotta make it more comfortable as a regular glasses and make it pretty useful. It's pretty easy to use. And the third way should be affordable to everybody. So I think we are making it happen this year. So for example, we've been working on this field for more than 10 years, and we just try our best to make it more and more affordable. So this is pretty much like
it's about what, $300 US right now?
400 maybe, 400 US dollars.
And when you say make it more affordable, how low do you think the price can go?
Well, ideally, I wish it can under 300 US dollar. Yeah, so I think that's so people can totally affordable. Yeah.
What is the next big thing in tech? I mean, we know that technology is moving really quickly. AI, for instance, accelerated pace. What's the next big thing in AI?
Well, when we talk about AR glasses, actually, it's the thing is about AI and AR. So they're actually one thing. So I think that AI is pretty much totally ready for the industry. But AR still need a little bit more time to make it more perfect to the end user. For example, we now get a single color and low resolution, like a VGA resolution. But in the coming 3 years, maybe 5 years, but I think that's all. So we can make it full color and a higher resolution. for example, we now get a VGA resolution right now, but in 2 years, I think it's going to go like 1080p resolution. So will be the huge thing.
It's like TVs going from black and white to colors, right?
Yeah.
Mirxes, thank you so much for your time.
Yeah,
Mirxes Zhou,
yeah.
co-founder and CEO at Rokid. Well, more now on the Trump administration's move to ban Harvard University from enrolling international students. Harvard's president emeritus Larry Summers is calling on the school to fight back. The former Treasury Secretary told us the decision is vicious, illegal, and very damaging.
If the Trump administration has an objection to something Harvard is doing with respect to foreign students, let it pursue the specifics of that objection through the processes of law. But simply throwing 6,000 students out and denying the many thousands of students abroad who have dreamed of coming to study at Harvard that opportunity because they're angry about a fight on other issues, that is not the way we do things in a democratic country like the United States. I am just appalled that we would have an administration that would contemplate actions of this kind. If I had been a member of an administration where such unlawful orders had come from the White House, I would have resigned immediately.
In the meantime, while we, I guess, see how the chips fall and while we figure things out, professors, students, parents, school officials, I would imagine are thinking about what they do now. And from just a practical perspective, existing foreign students at Harvard must transfer is one of the orders. How does that work practically, Larry?
I hope and trust that it's not going to come to that. I hope and trust that there will be legal actions that will be taken that will enable those students, many of whom dreamed for their whole lives of coming and having the opportunity to study at Harvard because they saw Harvard as a symbol of what was the best of America. I just pray that we as a country, through our judicial branch of government, find a way of enabling that dream to be lived. Because if we don't, we are going to be sending a symbol, a signal to the world that we are no more committed to what is free than the nations we label as our adversaries. And that would just be an incredible tragedy. I myself will be prepared to do everything I can to support the many brilliant, America-loving foreign students who I have the great privilege to work with.
Former U.S. Treasury Secretary and Harvard University President Emeritus Larry Summers is also a Bloomberg Wall Street Week contributor. Well, still to come, co-founder and CEO of Singapore-based biotech startup Mirxes joins us to discuss his company's Hong Kong trading debut. We'll ask about business plans and why they went outside Singapore to list. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from JP Morgan's annual Global China Summit here in Shanghai. India's been trading for about 2 minutes now. Let's do a check on how, pharmaceutical companies are doing, in particular on the back of earnings from Sun Pharma, reporting net income for the fourth quarter that actually missed the average analyst sentiment estimate. But notwithstanding, we're seeing in the first few minutes of trade, they are somewhat in positive territory right now, pretty much across the board. Sun Pharma, though, bucking the trend, currently down by about 4% at the moment. Its peers, though, in positive territory. Now, speaking of pharmaceuticals, top Chinese drug maker Jiangsu Hengrui Pharmaceutical is soaring in its Hong Kong trading debut after raising $1.3 billion. Currently, it is trading upwards of 30% as we speak. Of course, we're seeing pretty successful debuts in Hong Kong. CATL, for instance, ended its first trading debut up by about 16%. Now, Hengrui is China's biggest drug maker by market value and plans to use the funds raised to expand its research for a variety of treatments. Meanwhile, we're also following the Hong Kong listing of Mirxes Holding after its $139 million IPO. The Singapore-based biotech startup focuses on cancer detection technologies. It's been a pretty busy week for Hong Kong's capital markets after CATL's $4.6 billion listing, the world's biggest so far this year. And now Mirxes' Hong Kong debut comes with Singapore trying hard to attract more listings, including by simplifying its IPO processes. However, the Singapore Exchange has managed just one share sale this year. Well, joining us now, Lihan Zhou, co-founder and CEO, Mirxes. Lihan, first off, why Hong Kong? Why not Singapore?
Good morning, Haslinda. Really exciting day. Thank you for having me. Now, we have chosen Hong Kong because of the ecosystem of investors that since 2018, the Chapter 18A listing regime came about. Now, 70 plus company has listed, including us being the latest one. The share performance has been wonderful. I think really it's the depth of the ecosystem that's present in Hong Kong that made biotech listing viable. That's why we're in Hong Kong.
Might you do a secondary listing in Singapore? Is Singapore still an option somewhere down the road?
Singapore is home and always be home. And we have stated quite clearly in the prospectus that we are exploring SGX.
When might that be? What are some of the considerations?
We have 6 months before we can raise any money. So that gives us 6 good months to speak to the stakeholders and understand how do we best synergize between what we do in Hong Kong and what we're going to do in Singapore. I think there's going to be great synergy.
Lihan, talk to us about your expansion plans. I mean, presumably the proceeds from the IPO will go towards expanding your business.
Absolutely. So Mirxes is an 11-year-old company, but in the early stage of commercialization, Southeast Asia and China are a big focus. So 50% of the proceeds will go into scaling commercialization in those territories, and 30% will go into accelerating our pipeline in colorectal cancer blood tests, multi-cancer blood tests. So it's going to be a really exciting few years ahead.
The thing is, it is a very competitive space. You have big players in the US like Grail. What exactly is your strategy to compete? What's your competitive advantage?
Absolutely. Actually, cancer early detection field has been super exciting if you look at what Grail has done, what Exact Sciences has done. But these companies are barely in Asia. Now, the beauty of the US ecosystem where there's high paying power, great insurance coverage actually made it difficult for these companies to come to Asia. 99% of Exact Sciences revenue still is coming from outside Asia, I would say. So we're actually not very worried about our US peers coming to Asia because of the cost structure. But what's going to make us successful, Asian companies successful, is being able to understand the Asian healthcare landscape, which is quite different from the US, right? We have to make our products affordable, accessible to the mass in Asia. But what Asia can bring is a huge scalability. We're very excited about what we're going to do in China to bring the scale, to bring down the cost, which will make us even more cost effective for the rest of the region.
How important is the China market to your expansion in Asia as you talk about growth in this part of the world?
China is the largest healthcare market in Asia, so we can't miss that. And critically to Mirxes, our core product, GastroClear, works on stomach cancer. 50% of the world's stomach cancer happens in China. That's why China is critical to the early success of our products. which will then pave the way for us to introduce colorectal cancer test, multi-cancer test.
So when it comes to the tests for China, when might that be? Or if you've already started, how is that going?
It's going well. We've completed what we believe to be China's largest prospective cancer screening trial. Between 2021 to 24, we've submitted the data, we've gotten good feedback. We are optimistic of launching that in China in the second half of this year, while continuing our efforts in Southeast Asia and exploring opportunities in Japan and US.
Lihan, increasingly the U.S.-China tensions, have gotten companies and industries pretty much getting caught in the crosshairs. Do you see any impact from that?
The way that Mirxes has positioned ourselves is we do technology development and R&D globally, and our commercial focus is in Southeast Asia and China. So because of that, we actually had zero impact from the tariffs.
What risks do you see, though? It's a pretty volatile environment. It is a pretty challenging environment for most companies.
Well, the biggest risk we've been seeing for the last 2 to 3 years is really the uncertainty is leading, people to decide not to invest or not to invest as much as they should. But the market has rebounded quite well, as what we have seen today, as well as the last couple of days. So we are optimistic of the trend, and so as long as the world stays calm, I think we'll do okay for this year. China is a big opportunity. Southeast Asia is growing, and the population is aging. So at least in cancer early detection field, we don't see major risk coming from the geopolitics.
What might be a risk?
That I can't recruit enough people for the expansion plan. That's my biggest risk right now. We need good people.
So it is back to talent. Lihan, thank you so much for your time. Lihan Zhou, co-founder and CEO of Mirxes. Now, before we go, here's a look at our guests next week. Monday, we'll have an exclusive interview with Minneapolis Fed President. We're talking about Neil Kashkari as the central bank grapples with mounting uncertainties from trade to the U.S. deficit. Plus, we have analysis on geopolitical tensions and regional markets with PwC as well as the UBS India markets head. So that's it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.